Alright everyone, welcome back to the channel. Today, we're diving deep into the world of AI, specifically the company Paylor and their recent Q1 earnings report. Now, Paylor's stock price took a bit of a tumble after the report came out, and a lot of you have been asking me to break it down. What's going on? Is it a buying opportunity, or should we stay away? Buckle up, because we've got a lot of ground to cover. So, let's start with the headline. Paylor's Q1 was actually quite impressive. Revenues surged 21% year-over-year to a cool $634 million. That's no small feat, especially considering the current market climate. But here's the thing, the stock market is a land of emotions, and sometimes good news can spark fear. Investors saw a high valuation and worried it might be a bubble about to burst. Hold on a sec, though. Because before we hit the panic button, let's look deeper. Here's why Paylor deserves some serious attention. Firstly, they're not just growing their top line, they're absolutely crushing it on the bottom line too. Net income came in at a whopping $16 million, translating to a sky-high 177% net margin. This means Paylor's turning a significant chunk of their revenue into profit, a sign of a very efficient business model. But wait, there's more. Paylor isn't just profitable, they're generating mountains of cash. We're talking $130 million in operating cash flow and a staggering $149 million in free cash flow. That's real money, folks. Money they can use to invest in future growth, pay back debt, or even rain down dividends on shareholders. Looking at the balance sheet, things get even better. Paylor's sitting on a war chest of $3.9 billion in liquid assets, with liabilities that are dwarfed by that number. Financially, they're in an incredibly strong position. Now, that's the good news. But let's be honest, no company is perfect. There are a few bearish points to consider. One is share dilution. Paylor's outstanding shares increased by 8% year-over-year, which can dilute the ownership stake of existing shareholders. Then there's the stock-based compensation. It's on the high side, which raises some questions about how much actual profit the company is generating. Another potential headwind is international revenue. It dipped slightly quarter-over-quarter due to some economic wobbles in Europe. This shows that Paylor isn't entirely immune to external factors. The biggest concern, though, is the valuation. Paylor's currently trading at a high price-to-free cash flow ratio. Now, this could be because of the whole AI hype. The sector is hot right now, and sometimes that heat can inflate stock prices beyond their true value. There's a risk that if Paylor doesn't meet these inflated expectations, the stock could take a tumble. So, what's the verdict? Here's the deal. Paylor is a company with impressive growth, rock-solid financials, and a strategy that's clearly working. Their land and expand strategy with customers is a prime example. They're signing on new clients and then convincing them to spend more and more over time. That's a recipe for long-term success. However, the high valuation is a significant concern. The AI sector might be a bit overheated, and Paylor's stock price might be reflecting that hype more than the company's true fundamentals. So, is it a buy? Honestly, that decision is up to you. But here's what I can't stress enough. Do your research, don't just chase the hype. Consider your risk tolerance, your investment goals, and weigh the pros and cons carefully before making any decisions. Ultimately, Paylor's a fascinating company with a lot of potential. But in this market, potential isn't always enough. You need to be smart, you need to be informed, and you need to be aware of the risks involved. If you found this breakdown helpful, don't forget to leave a like and hit that subscribe button. We've got tons more deep dives into the world of finance coming your way, and we don't want you to miss out. And if you know someone who's curious about Paylor or the AI sector in general, share this video with them. Financial literacy is key. Remember, this is all for informational purposes only, and you should always consult with a professional before making any investment decisions. Thanks for joining me today, and I'll see you on the next one.